please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
With your perspective, much needed, because everything seems to be changing. There are too many moving parts at this point in time. And after that initial pull back which the Nifty showed, it's now started to recede. So the minor recovery, if you can call it that, has gotten sold into. For the moment only, the Nifty Bank is actually the outperformer. It's not performing as badly as the other indices. It was expected that once 24,800 gave up, the Nifty Bank would actually see severe selling.
No, but right now it's at 200-day moving average. It's not broken that. 24,700, 2730 is the 200-day moving average. Normally, you would want to defend the first, attempt at the 200-day moving average. Okay.
I was under the impression it's 800. Yeah. All right, it's moved down to 730. Then we'll watch that space as well. But at the moment, the bigger indices are racing to almost a 1% fall. Maybe we should also pull up the Asian indices to check where things are headed and whether there is any fresh bout of red on the Asian screen. Oh yeah, it's quite red all over, and mind you, they've already seen 1 day of falls. So you have Hang Seng down 1.3, Philippines down about 1%, Topics down about 0.6, Straits down 0.7, Kospi down 0.7, Nikkei down 0.5%, and all this is the second day of fall that these indices are seeing, and therefore we can't complain. We cannot be spared the blushes. It's 1% down almost on the Nifty and the Sensex. Well, let's shift to another issue which we cannot go away, we cannot get away from, the PNB fraud. In the wake of that fraud by the Nirav Modi group, the government sent a missive to all public sector lenders instructing them to probe all NPA accounts over 50 crore rupees and check whether there is any fraud. The point is, was this a business failure or was it a fraud, is what the government is asking banks to do. Post this letter, Rasesh Shah, on behalf of FICCI, he's the president of FICCI, wrote to the government asking for steps to be taken to ensure that investigations don't cripple lending and dampen business sentiment. He joins us now for more on this issue. Good morning, Rasesh. Always good to have you with us. It's a thin line between calling a failure a fraud. With the distance of time, what was once probably a business failure will start looking like a fraud. Is that what you are worried about, that there will be a witch hunt?
Yeah, absolutely. I think, to investigate NPAs for potential fraud should have been done in any case, because I think whenever a bank sees something NPA, the first thing they should do is to analyze the reason for NPA. It could be NPA because of business cycle reasons, it could be NPA because of the willful default, and now we have the third angle, which is outright fraud. So this should have anyway been done. So in a way, what the government has done and asks the bank is a good thing, because it was required. I mean, it should have been done in any case. But this should not become like throwing everything into the kitty and calling everything a fraud, because that absolves any bank official for any NPA saying, oh, it's not an NPA because of bad risk assessment or bad evaluation of a project, but it was fraud. Because so fraud should not become a cop out, and it should not become a kind of a witch hunt for even normal borrowers, because what will happen is it could paralyze the banking system and the corporate borrowers. And we, especially at this time when we need more private sector investment, we need people to undertake new projects, and what we call animal spirits have to be unleashed. An overarching air of caution on everything will dampen these spirits.
That's actually the important point, right, Rasesh? Because I was reading that a lot of banks have now started to tighten their norms as well. SBI, for example, has tightened its project financing norms. They've decided against funding interest during construction projects, etc. Do you think that this is an eventuality, that all of this is going to cripple lending growth in the near term?
I don't think it will cripple. I think what SBI has done
Oh. Okay, we can't hear him, so we just get back to Rasesh in a bit. Very important discussion there on the banking sector, but that's really what's happening in the market as well. So if you look at what the move right now, the Nifty is advancing to almost a 100-point cut. It's below the 10,300 and 10,400 mark rather, and a lot of stocks are now coming under pressure.
Yeah, and you know what's interesting is that the you know, as I was pointing out, the bank Nifty has actually outperformed. It's the metals. I think the market is sensing that this is something start of something.
Actually, today what's happened is the US yields actually fell. That's one point. And also, if governments are going to make more money by charging tariffs, then that also reduces the burden on the bond markets. So we are just missing out that actually, you know, the yield market is not doing too badly today. It's more the equity markets which are worried about growth. If there is competitive tariffs.
Okay, I guess we have resumed our, we can resume our conversation with Rasesh. Rasesh, you were telling us about whether all of this would cripple lending growth in the near term or not.
Yeah, I was just saying that this SBI norm is a good thing, because I think what will now happen is there will be need for more equity in projects, because historically what has happened is most of the projects were undercapitalized. So I think some strict norms required by the banks is a good thing, because I think it will tighten the lending, but it should still encourage project financing. It should still encourage, entrepreneurs to take risk, and there will be normal business risks which are part and parcel of that. So we always believed that about 2% gross NPA is normal for banking system, and I think we should not become so risk averse that no NPAs are required, because if you have no NPAs, then the banking system has become so cautious that it's not allowing normal risk taking to happen. So I think up to 2% NPA is a good thing, and banks should tighten, banks should insist on more equity, but eventually good quality promoters should get financing from
banks. But the system now is 16% NPA, Rasesh, or probably almost getting there. So we have a long way to get to 2%. Have you already noticed banks turning cautious? For instance, the jewelry industry guys told me over the weekend that cash is hard to credit is hard to come by.
Yeah, I think the immediate effect on this, on the gems and jewelry, companies is going to be almost automatic. Along with that, I think even trade financing, especially the LOUs and all, will also get harder for normal, companies which are in imports and exports. So I think all that is going to be the collateral damage that we will see. But as I said, once all this stabilizes, banks come back to normal, because banks need to finance, working capital. They need to finance all industries. But I agree with you. I think the gems and jewelry industry sector will feel the impact of this for quite some time.
Okay, Rasesh, good morning. Just a question here. Do you think time has come to ask whether we need so many PSU banks, whether we need PSU banks at all, and so many of them, maybe have 2 or 3 large PSU banks, and in time maybe have privatization of that as well? I mean, has time come to look at drastic measures like these?
Absolutely. Actually, we at FICCI have been calling it not privatization but rationalization of the banking sector. We need to rationalize the PSU banking sector for sure. We don't need so many banks, and if you actually analyze the PSU banking assets, State Bank of India itself is almost a third of the entire PSU banking universe. So if you take State Bank and 3 or 4 other banks, you can actually retain more than 50% of the PSU banking assets. So our suggestion is along the same lines, that keep only 3 or 4 large PSU banks, the good quality, the well-governed ones like State Bank of India. Others you can either merge into these 3-4 banks, or slowly and steadily privatize them by bringing down government stake. And it should be based on performance. It should be based on a lot of other performance parameters, so that privatization is seen also as a way out for government. Because how long can government keep on funding these banks? I mean, the bank recaps have been going on from 1994, and between 94 to now, we have had so many bank recaps.
Rasesh, what did the government tell you? That's more important. Are they open to implementing Nayak committee or anything like that?
I think the mood in the government, especially after this fraud, I think this was almost like the final straw, is that there is a need to rethink whether it's privatization, rationalization, consolidation. All those things are now on the table. Of course, we are heading into the election, so I don't think anything will happen before the election, because any big structural move like this will require a lot of consensus building in the parliament. And I think the effort on the government side would be to try and build consensus. I think we have an interesting experiment in Air India, which is underway already. If Air India privatization happens smoothly without too much opposition and too much chaos, then I think after elections we should see at least some move in privatization, rationalization and consolidation of the PSU banking sector.
Okay, before we let you go, Rasesh, what's your view on the market now? It's been quite disappointing since the start of the year for the bulls. We've underperformed most of the emerging markets as well, and now talks of a possible trade war. Do you think Indian markets are headed lower in the near future?
I think overall what had happened in the last year, there were two important things happened last year. One is I think the markets ran ahead of the economy, because the corporate earnings growth, the economic growth was muted until September, October. But after September, October, the economy has actually clearly picked up. We have seen that in GDP growth numbers, we're seeing it in corporate earnings numbers also. So I think the market ran ahead of the economy. Now the economy and the corporate earnings are catching up, and the market has to consolidate and stabilize and all this stuff. Also, last year we saw almost absence of any volatility in the markets. I think Indian markets, global markets, had one of the most stable, very low volatility regimes that we have seen. Obviously, a return to volatility is also due. So we expect that this year, at least the first half of the year, should be more consolidation, let the earnings catch up with the market, but also with some periodic bouts of return to volatility because of mainly global issues, especially trade wars, as you said. This is going to have a big impact on global trade and all. Fortunately, India is fairly insulated, and if there is a big war between China and America, I think India should sit out and make the best of it.
All right, Rajesh, we'll leave it there. Thanks a lot for your time today. It was good talking to you. That's the view from Rajesh Shah as the head of FICCI.
Yeah, I think there is an... sorry.
Yeah, I just want to point out, for whatever it's worth, still down, of course, but the Bank Nifty is almost at the highs of the morning. And rupee, I mean, just see the intraday chart of currency if we can. It's now approaching 0.5% strength on the Indian rupee. There was a bit of a pause, and then a fresh round of strength has resumed in the currency. So almost, as I said, approaching 0.5%.
Possibly, probably, one reason why the banks are just getting a look in now is also because now there's almost competition, fierce competition to buy some of the NPAs. I mean, we are seeing this tie-up that ArcelorMittal has done with Nippon, and actually more on that. ArcelorMittal entered into a joint venture pact with Nippon Steel and Sumitomo Metal Corporation to jointly acquire the assets of Essar Steel. The company's arm, ArcelorMittal India, submitted a resolution plan for Essar on February 12th. And, you can get a first-hand account if you just stay on for a bit here. Anshu Sharma, our colleague, caught up with Brian Arana, the Executive Vice President, ArcelorMittal, to get more insights into this bid and this mega joint venture that they've entered into.
In terms of getting into India, you know that we had some significant plans for a greenfield facility back in 2008, but the economy went awfully negative after that, and since then it's been very difficult to justify the capital cost of doing a greenfield facility in India. So we've been looking for various alternatives, and now we find some assets have come up for sale. So it's an opportunity for us to take advantage of that.
Which are the assets that you have bid for?
We've put in a bid for Essar. It's our main focus in terms of the distressed assets that we've looked at. So we are focused on that one and hoping it will turn out well for us.
ArcelorMittal is known for a turnaround of distressed assets. So how much time do you think you'll take to turn around the Essar Steel's Hazira plant?
I think turning it around is probably one way of putting it, but to take it to its nearer to its nameplate potential is probably a better way to put it. It's been running in a near bankruptcy mode for quite some period of time, so the previous management was constrained in what they could do. We will be free of those constraints and can probably within a year's time show significant progress, and within 2 years, much more progress than than the current level of performance of the plant.
Okay. So ArcelorMittal is known for world-class facilities. So what are the changes that we can expect if you win the bid for the SR Steel plant? And if I can also ask you, what equity value do you see in SR's steel plant? Well,
first of all, the changes that we will make in the plant are something that I'm not at liberty to discuss because it's part of the resolution plan we have submitted. And we are subject to some confidentiality clauses in that process. So hopefully you let me respect those.
Yes.
And then with respect to what we see as value, you know, we are a global company and India is a growing market. So it's one of the markets that's probably going to have the most rapid growth in the next few years. And it's clearly of interest to us to be participating in the growing markets. We are producing 95 million tons of steel in a number of countries around the globe, and this was one place where we didn't have a good production facility already. So it fits into our strategy of being a global player and taking a major role in growing economies where we can.